Hey, Courtney Smith here with our weekly TradeSmith newsletter with lots of super cool stuff in it. Of course, probably the coolest thing in the whole presentation is this page right here, which I'm sure you now have totally memorized. Let's get right into it. You know, the market was strong on Friday, but I sort of feel like we're running out of gas here. We're kind of running out of momentum on the upside. I've got my infamous squiggly resistance cloud there, which is where I think this market is going to top out. So we're starting to get into that zone now, and so look for the market to start to really kind of go sideways for a while as it chews through that resistance. I also think this is a perfect time for us to get some type of a setback in the market as well. One good thing, though, is the purple line is the on-balance volume, and that's showing some good strength. No divergences at all, moving up along with the price action, and that's a big change from where we were back in February when the purple line was weaker than the price action. So this is something that's helping us out. But as I say, I just can't see this market moving much higher for a while. Let's consolidate up above, say, 2040 to 2100 or 2120, somewhere in that zone, and just chop sideways for a while, build up some strength, and then maybe move to new highs. Dow Jones, same story, except it's stronger. Look at how we're actually much closer to the old highs that we left in November and December. And look at that purple line, explosive OBV, on balance volume. It's not only accelerated since the beginning of March, it's now past the price and moving higher than price. So Dow Jones is really where the action is. However, the NASDAQ is making a big comeback as well. Look at that on-balance volume line. Wow, 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 wow. It's really leading the market higher. A big key reversal on Friday suggests that this market can get up towards the 5,100 level, and we're just around 4,900. So that's about a 5% rally from where we are now, 4 to 5%. So still bullish, but think we're reaching a top. Seasonality, also showing good strength. That's helping to support the market. And as a result, I'm taking bigger than normal positions because our seasonality tells us to. We talked about that before. Momentum, once again, that purple line, wow. The yield curve, I put the arrow right where we are now. So the market now, the yield curve, this is a year ago, and the yield curve leads the market by a year. As you can see, this is going to start to turn quite bullish here later in April. So once we get through to April, we're going to see this start to help the stock market and the economy move higher. Unfortunately, look down the road and you can see it's not going to help us at all once we get over there into 2016. But right now, it's neutral, but soon to turn bullish. Asset allocation is turned neutral, just sideways here. Risk appetite also really turning sideways here. So these are two factors that are not supportive of the market. The market doesn't want to take a lot of risk. They're going back into hunkering down. And on the asset allocation, they're kind of saying bonds, stocks, who cares? They're both kind of garbagey. Let's keep moving though. Global shares, they looked so great a week ago. Now we're seeing a lot of volatility and no net movement. So we talked about how I look for the stock market to move into a sideways trading pattern. Global shares have already done that. Nonetheless, this could be just a pause that refreshes, not a topping pattern. Similar situation in all of our global share indices. Australia, Japan took a dive, but let's go back to the European ones for a second. So Japan looks very bad. I'm going to have to say I don't want to be long it anymore. When we start making lower lows like that on a big gap down, that's a pretty bad sign. And breaking those March lows was also a very bad sign. So I don't want to be long Japan anymore. The others I'm fine with, such as Spain, France, and my favorite, Greece. Notice that Greece is holding up better than all the other indexes. Notice too that we made a higher high and a higher low, and on Friday we had a reversal bar. I'm going to go long Greek shares. The ticker symbol is GREK. I'd probably put a stop below the lows we made in March. And look for this thing to chug higher, and look for it to surprise everybody that Greece is going to be one of the best stock markets in 2016. Notice we're actually already up almost 50% from the lows. I think we're going to go up another 50% before the end of the year. Treasury bonds. This has been a fascinating story. We've broken out, we've confirmed the technical breakout of the declining wedge. I've put an orange arrow there to show where the objective is. We should get up over 134, and we're just under 131 right now. So that's a nice rally. At the same time, our fundamental factors are starting to clarify. We'd gone through several weeks where it was like, are they bullish? Are they bearish? I really wasn't sure. So the bottom two indicators, I think, are pretty clearly pointing for lower interest rates, which means higher bond prices. And gold, which is that gold line, I kind of put a hump there and suggesting that it might have also turned down, which would suggest lower interest rates. Bearish, if gold goes down, that's bullish for bonds. And that may be happening here. So, of course, we'll get to gold in a minute. Here's the dollar. Choppy, sloppy, bear market in the dollar. Why? Because nobody believes Janet Yellen's going to raise interest rates this year. And if she does, it'll only be once. Whereas a couple of months ago, we thought she was, not we, I never did, but the market felt that she was going to raise interest rates 4 times this year. Now the betting is 2 times, and I really believe that we're in the process of saying 0 to 1 time. Right now the market's saying 2 times, but that's a big change from the 4 times that we were looking for in January. So look for this idea of Fed tightening to keep coming out of the market and keeping pressure on the dollar. Gold, let's break this down. Gold has been trading off. That's pretty clear. You can look at that chart and see that we peaked out in kind of the middle, early part of March, and we've been going down ever since. But I believe that this is a flag formation. And a flag formation, you can see it very clearly. That's a textbook example up at the top. But one of the critical things that you need to do when you use classical chart analysis is you've got to look at the volume. In a flag formation, which is bullish, you look for volume to decline as it goes through the formation. And as you can see down at the bottom, volume, in fact, is declining as we move through the flag formation. Now, the flag formation is completed when the price breaks through the top downtrend line. And it should happen on heavier than normal volume. It doesn't have to be super, super, super high, but it's got to be higher than normal volume. And that would confirm that the flag formation is over and the bull market is resuming. Flags are bullish formations, and they are designed to be broken out of through that top downtrend line. This week's going to be critical. We're trading right underneath that downtrend line, so there's a really good chance that we may actually break through it. And I got rid of all my gold positions. I'm not long gold anymore. Got out of those a few weeks ago. But if we break through in this flag formation, I'm going to reestablish my positions in particularly junior miners. But I will probably buy a diversified portfolio, some big cap companies like Newmont, some small cap junior miners like Yamana Gold, AUY, and in addition, I would probably buy the ETFs GDX and GDXJ. One is big cap miners and one is small cap miners. So I'd probably put on a nice mix of big and small gold companies looking after we get the breakout. So I'm going to get aggressive. Until then, gold's going down. Forget it. Don't want to be involved. Our indicators starting to turn more bullish. They've been very whipsawy lately, and you can see that I've got 2 of them are rated buys and 1 is a bear, which would suggest that gold is about to break out of that flag formation because the key short-term indicators have turned net bullish. Oil. We broke the uptrend line. I talked about where's the downside objective. It's that horizontal orange line. That horizontal orange line connects a low that was made back in December with a high that was made at the end of January. And so that's my objective on this downside move. That's 35 bucks. I called for that when we were up at 40. So the market's going along exactly as predicted. Not enough, we can't make money from this level down to 35. If we break that orange line, which is at 35, then we could go back and challenge the old lows at 26. Don't think we're going to make those old lows at 26, but we could go down to 30 for sure. 29, 28, good chance of that. So that orange line is critical. If we break it to the downside, I want to get short oil, but I'm not sure that it's going to yet. All right, everybody. Thank you very much, all you freebies. Love having you around. But of course, if you want to join the cool kids over in the cool kids table in the cafeteria, then you really should subscribe. Go to that website up at the top and you can get involved and be one of the cool kids. All right, all you cool kids, you fully paid up members, hang on just a minute and we'll talk about some of the great trades we've got. I think just about every trade made money this week, so that's a pretty good thing. But hang on just a minute. We'll get to you premium fully paid up members.